What's up guys, and in this video I want to talk to you about one fundamental thing that I think is missing with the majority of the people that are investing in crypto. And we are on a big mission to help you guys out in terms of like financial education, and there will be more and more videos about this in our YouTube channel, so make sure to like and subscribe. Alright, so I will be sharing a few different websites that you guys could review on when you do your own research. That way you will be versed into thinking, what am I getting into? Alright, so let's start with the very basic. What is cryptocurrency? So cryptocurrency is a digital or virtual currency secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Okay, so it's actually the one that you are getting into. So that is cryptocurrency or crypto in general. Okay, so a defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. And that is actually the good thing about crypto. All right, so the next one would be the key takeaway. So cryptocurrency is a form of digital asset based on a network that is distributed across a large number of computers, and this decentralized structure allows them to exist outside the control of governments and central authorities. Now, some experts believe that blockchain and related technologies will disrupt many industries, including finance and law. So that is actually the ones that are, conventional ones, like the bankers and all those people. So the advantages, okay, what are the advantages of cryptocurrency? It includes cheaper and faster money transfers and decentralized systems that do not collapse at a single point of failure. Now, the disadvantage, although on the other hand, of cryptocurrencies is that it includes price volatility, high energy consumption for mining activities. So if you are a crypto miner, then that will affect you, and use in criminal activities. Now, I would also follow up on the price volatility, guys. When you get into crypto, yes, there will be times wherein you will make a profit. Sometimes it's if you get lucky, or if you had really great technical analysis and it goes into your advantage, you will earn a lot. But you always have to be careful with your investment because the price is volatile. It may really pump as high as 100% in a snap, but it may also, dump or dip 100% in a snap. So there's a lot of highs and lows. Some people say that, crypto is speculative, meaning you always have to monitor it. Yes, when you are doing sculpting, it is very, very speculative. But if you are doing like long trades, you buy it and then hold it for a few years or so before you check it out and trade it, then it's a totally different story about that. So understanding cryptocurrencies are digital or virtual currencies underpinned by cryptographic systems. They enable secure online payments without the use of third-party intermediaries, but you always have to be careful because there are a lot of scammers or hackers out there. That's why, if you are into cryptocurrencies, I would strongly suggest that you invest in your security or the safety of your assets. And we have actually created videos out there talking about hardware wallets. I myself has my own hardware wallet that I use to protect my crypto assets. So the next one that I would like to touch on in this video is that the crypto passive income. So let's talk about other ways of generating money in crypto. So passive income is money generated from ventures in which an individual is not actively involved, meaning the word that they normally use is staking. If you have like a crypto and then you stake it right there, it earns interest and it gains income passively. Okay, so for the most part, all you need to do is invest your money or digital assets in a particular crypto, which I mentioned earlier, that's staking. So investment strategy or platform, and watch it generate profit. Some cases, the earnings are fixed and predictable. In others, several factors beyond your control may come into play. So you always have to do your own research. Okay, so typical way many try to make a return in crypto with little to no involvement is through buying and holding crypto, also known in the industry as hot hodling means that an investor is prepared to purchase a digital asset with the mindset that its price will hopefully rise significantly sometime in the future. So such investors are ready to go to the distance, as this long-term strategy might require them to hold their positions anywhere between 6 months to 5 years. Now, through the duration of the investment, an investor does not have to be proactive in the crypto market. They only need to buy the digital asset and store it in a secure wallet, preferably a non-custodial wallet or a hardware wallet, just like what I mentioned earlier. So wallet is a device or app where you can store a special key, and we have made content about that, and you could go ahead and check out our channel. That way you will have like an in-depth discussion on what a hardware wallet is, what a wallet is basically. However, simply buying and holding a crypto asset for any length of time does not guarantee that you'll make a profit. In fact, it's very possible you could lose money, as such exclusively hodling crypto cannot be considered a truly passive income generator. Okay, so I would strongly agree on this one. There is no guarantee that what you are holding or the crypto assets that you are holding will generate money eventually. You always have to be strategic. You always have to do your own research in-depthly before you invest your priced money. So ways to earn passive crypto income: proof of stake or staking. That's what I mentioned earlier. It is a type of blockchain consensus mechanism designed to allow distributed network participants to reach an agreement on new data entering the blockchain. Note that blockchains enable open and decentralized networks where participants contribute to governance and process involved in validating transactions. So that is the proof of staking. Next one would be knowing fully well that transaction validation might be technically tasking. You could opt for POS, or the proof of stake blockchains that allow you to delegate your stakes to other participants who are ready to take up the technical requirements of staking. So be always wary of what you are and where you are putting your money into. There are projects that are very legit. There are projects that has very high potentials. There are projects that are rug pulls. Rug pulls are like the scammers wherein they just take the money and then just go away with it. So always be careful in investing your money. So lending. Lending has become one of the most popular crypto services in both the centralized and decentralized segments of the crypto industry. As an investor, you can lend your digital assets to borrowers for a chance to earn interest. There are 4 main lending strategies you could opt for. One is the peer-to-peer lending. Next is the centralized lending, decentralized or DeFi lending, and then the margin lending. So those are the type of lendings that you could go ahead and check out. I will be putting the link to this article in the description of the video. That way you could read through everything and know your options in terms of lending. The next one would be cloud mining. Like the proof of stake mechanism explained earlier, some blockchains, including Bitcoin, opt for a more computer-intensive approach where users need to prove the eligibility of their claim to become validators. Now, by competing against each other to solve highly complex mathematical puzzles, this process is called crypto mining. Due to the competitiveness to this consensus mechanism, miners have to invest in powerful computers and pay exorbitant electricity bills. Now, that is one famous way to earn passive income. Even until now, there are still miners, and that is the reason why the graphics card has risen, or the price of graphics card has risen in the past years because of the miners. Now, undoubtedly, this venture is time-consuming and technical, and so investors often offer an alternative approach which they call cloud mining. And what is cloud mining? So with this, you can pay third parties to take up the technical aspect of crypto mining on your behalf. In essence, you pay a platform that offers such services a lump sum to rent or buy mining machines from their mining facilities. And we have created some contents about cloud mining as well. There are also other options that you could check to see, your options in terms of what are the NFTs that you could purchase for you to pursue the cloud mining and all those stuff. Go ahead and check out our channel. So dividend earning tokens. Certain tokens offers holders a fraction of the revenue of the company that issued them. All you need to do is hold the token and you're automatically eligible to receive a certain percentage of the company's revenue. Now, the number of tokens you own determines the share of the revenue you would receive. An example is the KuCoin, where holders receive a daily share of transaction fees accrued by the KuCoin blockchain assets. KuCoin is one of the famous tokens out there as well. The amount received is proportional to the amount of KCS tokens each holder takes. So you also have yield farming. Yield farming is another decentralized or DeFi method of earning passive crypto income. So this is one famous way of earning income as well. This is made possible by the dynamic operators of decentralized exchanges, which are basically trading platforms where users rely on the combination of smart contracts and investors for the liquidity necessary to execute the trade. So this is one of the famous passive farming methods out there, and you could go ahead and read through all the things in here as well. It may also interest you in the long run to get into yield farming. So those are the things that I feel you guys need to know about crypto and the ways on how you could earn passive incomes. So if you haven't subscribed to the channel yet, consider subscribing, click that bell. That way you'll always be notified when we upload new videos that are educational, and we definitely guarantee that you will learn some things in the contents that we upload. I will see you on the next. I'm out.